Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Hiral, good morning.
Good morning, Alex.
A lot to unpack and I think quite a few of you would have caught that already in the trade setup for the day. Of course, the Fed decision to pause rates and also most recently, or rather this morning, you had the China central bank decide to cut the rates in order to spur the economy. But all of that, I think, ties into the first chat that we've got lined up here, and that has to do with the pack that has been shining bright. Even in the session yesterday, you saw one index that outperformed the rest, and that is the metal index. And there's a lot of positivity, not just about the traditional steel makers, but also companies like APL Apollo, companies that are making pellets where the prices have been on the way up.
Absolutely. In fact, if you see in terms of metals, since December, I think investors and analysts, Alex, have been watching out for the metal space, but there is no consensus that we've been trying to pick up as to, yes, there is some underlying positivity and you could see an upside. There is some bit of confusion in the markets as well, in the minds of the investors as to what is to be done, because it's little cyclical as we speak. In fact, that's a point where we need to go out and understand as to what needs to be done with the metal space. In fact, Amit Dixit from ICICI Securities joins us to discuss more in terms of what's happening in and around the metal space. Amit, good morning and welcome to the show. Amit, my first question coming to you is, overall, if you see the metal index now continues to be in the limelight, and any positive news that comes out from China augurs well for the metal companies. We have seen a steady pullback as well since that Jan to Feb period in terms of metal counters. Overall, from a sector perspective, what's your view?
Right. Okay. Amit, specifically with respect to the steel counters, and I'm trying to actually break things up to understand which of the companies that we're focusing on this morning are the ones that we need to watch out for most closely. So you've seen that the steel companies have outperformed in the recent past, but you also have a few smaller players that we've seen run up very substantially. I was talking about the pellet manufacturers. They've seen quite a bit of rally in the recent past. Uh, Based on the fundamentals, okay, so I think we might be having a bit of an issue with Amit's feed, but let's pull up that graphic point that we discussed earlier in the morning with regard to the performance of some of these stocks. Because if I look here at APL Apollo, just that one counter, and I look at the 1-year return, it's as much as 45%. But if I compare that with the primary steel producers, you see JSW Steel as well as Tata Steel. Tata Steel is up over 118% in the 1-year period.
Right. And overall, if you take what's happening in the global markets as well, Alex, into consideration, now the dollar index has been weak this week, has been on the weaker side, right? Now that is something which will augur well in terms of non-ferrous metals,
right?
Because that's what gets cheaper. So companies focused on non-ferrous metals will be in focus. Apart from that, if you see in terms of iron ore and aluminium, companies focused on these metals will also be in focus. So you have the likes of a Hinzink, Hindalco, all of these counters will see that traction pick up in today's session. So completely, as Amit was also mentioning, what happens in the global markets, what happens in terms of China, specifically from a demand perspective, is absolutely crucial to understand the linkage with regards to our markets.
So I'm guessing that we may not be able to get Amit back, but two very crucial points. If you zoom out and we look at the two largest economies of the world, on the one hand, there are Bloomberg reports from this morning that talk about very frantic meetings that are being made between policymakers in China and a lot of executives and people in the know of how business is working to find out how to spur the economy.
Absolutely.
That is happening in conjunction with the measures that are being taken on the monetary policy front to spur the economy. In the US, you have that spending curve that will kick in next year. So whether or not all of the infrastructure projects that they had initially planned will go through as planned is a question mark, a bit of a question mark. Of course, a lot of that spending is supposed to have a bearing on infrastructure, and thereby steel demand will also get impacted there.
The sector is going to be in focus from here on.
So, but for now, let's just say that we keep an eye on the metal space. Of course, the next counter that we'd like to speak about is in the IT pack. And IT as a pack, a lot of question marks about the rest of this financial year. Shorter term, there are some questions about the demand trends here, but specifically on WIPRO. That's a company in which our colleague Tushar has done a deep dive, and he's found out that perhaps that initial enthusiasm about the takeover of a new CEO, we're talking about Mr. Delaporte, some of that enthusiasm seems to be going away just a bit. Why is that?
So, Alex, the story is essentially about Mr. Delaporte, and what the promise that he came in with. He came in with the promise of transformation. He came in with the promise of taking tough decisions to transform a company that has built layers upon layers over the decades. So, what he did immediately when he came in, he reduced the number of layers from 26 to 4. Just went from 26 verticals to 4 verticals. Then he made the biggest acquisition in the history of WIPRO in Capco. This was a bet on consulting for the company. So what has now happened? Now we are at almost July 2023. He took over into July 2022. It's 3 years. He has just 2 years left. But those impact is still not showing up. The restructuring is not, impact of the restructuring not showing up.
You were talking yesterday about the fact that perhaps the restructuring came in a little earlier than some people had wanted or said that maybe it came too early.
Yes, so if you see a company's built over 50 years,
yeah,
there are 26 layers. If you see a company's built over 50 years,
yeah,
there are 26 layers. So if you want to reduce it to 4, if you do it within the first 6 months, it's a bit of a hard task. It is definitely going to have a fallout, and there was a fallout. There were 2 rounds of exodus since Delaporte has taken over. In 2021, when the first round of restructuring came into effect, we had seen about 200 senior vice presidents exit the company. In April, there's another set of restructuring that came into effect, which 14 senior level people exited. Now, to Delaporte's credit, it's a good move that he has done, but that has spooked the leadership. What he now needs to do is to get them in confidence so that his plan for the turnaround continues.
Which your sources are indicating. Sorry, you were saying.
No, so clearly, but with this as well, what we need to understand, Tushar, is if you see a comparative with regards to the other IT players, does that actually reflect in the financials as well for a WIPRO?
So, in the sense, WIPRO is a bit worse off than the rest of the IT pack. We are in the midst of a slowdown. Indian IT companies are coming off pandemic highs because the rate of digital transformation is coming down. Then there is a specter of recession in the US, as you guys talked about right now. There's also a war in Europe. So these US and Europe are the biggest markets for our Indian IT companies. So when there is pain there, so these guys are going to feel. Now, what has happened is TCS, the biggest Indian IT company, and its smaller peer, that is Infosys, they are less impacted as compared to WIPRO. They are not warning of a degrowth in Q1 as compared to WIPRO.
Okay, so, but to the last point and where things go from here, I think some of the people that you were speaking to off the record were suggesting that perhaps there needs to be a little bit more transparency and give or take of information between the management and, of course, Mr. Delaporte. Is that what is my takeaway correct?
Yes. So essentially, the people we spoke with for the story, they say that Mr. Delaporte needs to bring the leadership into confidence.
Sure.
WIPRO also responded to our story late last night. They said that the transformation is a work in progress. This is the biggest transformation in the Indian IT space in the longest time. So there will be some pain in the beginning, but they're very confident of delivering growth as we move forward. Where will this growth come from, especially when BFSI is cornered by TCS and Infosys? They're betting on consulting.
Right.
So far, no Indian IT company has been able to crack consulting, but they acquired Capco at $1.45 billion, and they want this to start showing its results. It hasn't yet, but let's see if WIPRO is the first company who can do that in India.
So, like he said, it's a crossroads, Hiral. We'll have to see whether they make the right move.
Absolutely, and whether the move will help them overpace and probably outrun the other companies or not is going to be interesting to watch out for. And if you see in terms of the IT space as a whole, there has been that up move that has started to come in from April lows, and from there it's mainly the mid-cap IT counters which have seen that runaway rally as compared to the large cap IT. Now everyone's talking about whether the large cap IT names will actually play a catch-up run with the mid-cap one. So watch out for the IT space also pretty closely. But apart from that, we spoke about the metals, Alex. FMCG as a space has been in focus as well. Last couple of trading sessions, if you go to see, we have been talking about FMCG with regards to wheat prices, right? The kind of cap that has come in terms of wheat. And there has been a sentimental move on FMCG players. Now, Britannia is a stock that is in focus as well. Sajid is joining us. Sajid, good morning. You have MK, which has come out with a report on Britannia.
Yeah, it's an initiate.
And an interesting timing, right?
Right. They're basically talking about Britannia hitting a peak market share of nearly 33.5%, and that's the peak they have hit in 15 years. They're also looking at key focus area for the biscuit major, basically primarily on going into the premium segment, which Britannia is focusing on, and the shift from rupees 5 SQ to rupees 10 SQ. That's something that the brokerage is betting on, that the company has already started that work, and eventually if they are able to push that SQ from a 5 to 10, that's going to augur well for the revenues going forward. They're also looking at betting that Britannia will be able to consolidate some of the unorganized market and get those share into its fold. But one of the key issues which have raised is Britannia has not been successful in getting into adjacent areas like cross-arms or others. They're doing partnerships and all, but they're not been able to execute that, and they've been lagging behind in that execution, and that's something which the brokerage is keenly looking at, so that the Britannia can grow from here, because the management is coming is guiding for roughly around 35% of revenues coming from non-biscuits going forward in the next 3 to 4 years, and getting into the adjacent areas of biscuits is something key to that. The brokerage has initiated the company with a buy recommendation and a price target of nearly 5,700 per share by next June. The stock has already moved nearly 14.5% in year to date, and jumped 45% in the last 1 year. So it's like we need to see how much more room it has for movement.
So today might just be a good day. Whether it's a good year is another matter altogether.
Yes.
A very cheap joke that I just made. If you want to talk about another space that you track very closely, which is the defense space, and that's one of the stocks, Hiral, that we're mentioning, which is Hindustan Aeronautics. And Sajid, you've been tracking this space for quite a while, which is why I thought I'd ask you. And of course, the development has to do with the manufacturing of fighter jet engines. There's possibly a deal between the US and India. But in the time that you've been tracking it, has been mentioned quite a few times, right?
That's right. When we started off the entire development of our own aircraft, which is Tejas, right, LCA, we were looking at getting our own engine and or transfer of technologies, and these are different technologies which are not easily transferred to other countries, and US is a bigger manufacturer of defense. Not only that, any transfer of technologies from the US to any other country requires the government of or US federal government to approve those transfer, and they've been in negotiation with
India,
India
and
for
various other partners.
various other partners. They've been Lockheed has been doing it, GE, Rolls-Royce, others, all have been in discussion. So any engine technology transfer requires the US, and it seems now that before the Modi trip, which is going to happen at the end of the month, they're going to open up defense technologies for India, basically, and that's going to be a big thing because we are looking at the next generation aircraft which HAL is trying to build, and for that we need an engine.
Yeah.
And that engine may come in from either GE or Rolls-Royce. So GE is a front runner for those engines which comes in. Now this is not going to happen next one.
Correct.
Yeah,
It's
it will
still a
take a
long-term.
decade.
Correct.
That rollout plan for the next generation, it will take at least 5 to 10 years.
Which is the context that I wanted you to provide.
So Sajid, with this, everyone's focus is on HAL, but do you think any other defense firms also could be in focus, could be potential gainers out of this?
See, it all depends upon what kind of strategy that US is taking, because US wants a bigger share in the India's arms import. Market. And India is now concentrating more on getting its domestic supply chains as well as manufacturing in defense. So if you look at in the last 2-3 years, a lot of sourcing has now been curbed to domestic firms. So domestic firm can get into partnerships and technology transfers with foreign companies and manufacture in India. So that's the key, that you have to manufacture in India, and a large and what we are doing is the last 3-4 years, a lot of legacy orders are getting over, right? So the new orders which are coming in are going to go for the new for the domestic. Only high tech and quick buys which require emergency buys are only allowed to go outside the country. So and platforms like a multi-role aircraft or a aircraft carrier or others where it requires some technology, the government allows them to go ahead and buy it from outside. But otherwise, they're limiting it to Indian firms or for joint ventures which have foreign partners in India. And government has been open, saying that the foreign firm can take a majority in an Indian firm, subject to the fact that they are bringing in high tech into the country.
In fact, a lot of other technology firms from semiconductors as well, you're seeing a similar trend wherein there is technology transfer happening from US and UK companies, and it's Indian companies who are looking to start the manufacturing process. In fact, you did have a recent RFP that was floated by the government as well with the changes on the policy.
That's again going to take 5 to 10 years, if I'm not sure. But the thing is that we were referring to a BOFA report on supply chain for semiconductor, for electronics and mobile.
Yeah, we were talking about
Apple yesterday, and we were talking about the fact that in other countries like Vietnam, the scale is built up first, and then the back-end technologies come in later. So that's what is going to happen. There are 68 global companies now who have supply chains in India, and if they bringing in scale, at some point in time they will go backward integration to get all the stuff in India.
I think at the center of all of this, Hiral and Sajid, is the geopolitics at play, right? Because if you're talking about a deeper tie between the US and
not just
India,
US, but it's basically China plus one.
Exactly,
kind of
that's what I'm saying. So it's in the context of the geopolitics between China and the US, and manufacturing ties being set up in defense also potentially with the countries like India. Sajid, thanks so much.
Thank you
for that context. Let's take you through a few more stocks. Hiral, SJVN is the other stock that I'm watching out for today. It's on the back of an MOU that was signed with the Maharashtra State Power Generation Company to develop as much as 5,000 megawatts of energy. It's not clear as to what type of energy this is going to be, because it could focus on various projects, including hydro, pumped storage, wind, solar, hybrid, as well as green hydrogen projects.
Right. Apart from this, Alex, thanks, but banking counters will be in focus as well. Yesterday we were talking about who will win the race to hit the 1,000 between an Axis and an ICICI, but now your Axis, which is back in the news today. Overall, if you see, Bain Capital is likely to sell stake up to almost around $267 million. The offer price is in the range of around 964 to 977.70 per share. Now, this would be a discount of, say, around 1.4% as against the current market price. Clearly, as we know, Bain Capital is one of the minority shareholders in Axis, and they hold a stake of around 1.3% currently. So watch out for Axis Bank. and that's the stock we'll be watching out for. Apart from that, as we mentioned about Kotak as well, when news reports are suggesting that Zurich Insurance is in talks to buy 51% stake in Kotak General Insurance, and they are in early stage of negotiations. Now, with the valuation, you see that comes up to around $800 million, because $400 million is what they're looking to pay for the 51%. Now, this would mark one of the biggest deals in terms of the South Asian insurance market. And as we know, Zurich is one of Europe's largest insurers as well. In terms of the Indian general insurance market as well, we've seen a growth of around 11 to 12% in the previous year. But clearly, the insurance space in India is underpenetrated, right? So a lot of global eyes are coming in terms of India as to how they could be beneficiaries from a longer term perspective. Whether this deal goes through or not, we don't know yet, but clearly there could be some bit of traction that we could see in terms of not only Kotak, but a lot of other insurance players could see a counter impact in terms of sentiments in today's session.
Yeah, higher competition as well coming into the space. But we're just a short while away, just a few minutes away from the start of trade. Indications are that it will be a muted start according to the SGX Nifty anyway, and the global cues that we've gotten handed are a little mixed, to say the least. But there's a lot more coming up in just a bit. You'll find all of that action right here on BQ Prime, so do stay tuned.